Welcome to Recalculating Small Business. Like its award-winning book, Recalculating is dedicated to small business in America. Your hosts are Don Mazzella and Dan Perkins. Don Mazzella is the editor-in-chief of the Small Business Digest. Dan Perkins is a registered investment advisor with 43 years' experience in managing money.
Dan Perkins here, your co-host, along with Don Mazzella of Recalculating for Small Business. Our radio program is dedicated to you, helping the small business owners increase their profits. We draw our name from Recalculating, voted the best small business book of 2017 by the Independent Press. In this book, it features ways to grow your small business. Now, here's Don Mazzella.
My co-host Dan Perkins is on assignment, but we are about to talk with someone whose company helps enterprises better distribute their products. Welcome, Brendan Heegan. He's your founder of Boxzooka, Fulfillment and Global E-commerce.
Thank you very much. Pleased to be here.
Brendan, as we ask all our guests, tell us a little bit about yourself personally, your background, a little bit about your company and your website.
Well, sure. So my background, I was in logistics and transportation for the better part of my career. I started out with Airborne Express, if you remember that, way back in the day. They were purchased by DHL in 2002, and so I spent the next almost decade with DHL, and went on to another fulfillment company called Nugistics, and from there, encompassing that experience, I learned enough to start my own business doing transportation and fulfillment here at Boxzooka.
And your website?
It's boxzooka.com. BOX as in xylophone, Z as in zebra, OOKA.com.
Okay, I'm going to ask the question. How did you come up with such a great name?
I wish I had a more creative answer for you, but I knew I wanted the word box in our name, and I didn't care really if it began with box or ended with box. And we worked with a creative team who was able to run some sort of an algorithm and gave us a couple hundred different names that started with box and ended with box, and we just started saying them out loud until something sounded, until it had a nice ring to it. And we came upon this one.
Okay, but your company has kind of a unique niche. Tell us about it.
Yeah, sure. So, we're a fulfillment provider for e-commerce and business to business or wholesale, if you might call it that, retail merchandise. So we basically maintain the inventory of an online retailer or any kind of e-commerce retailer, and when they get orders on their website or when they get the orders from the wholesale companies they might work with, like a department store or something like that, those orders are transmitted from the retailer to our warehouse management system, and our team goes out and picks the order and packs it appropriately and sends it off to wherever it needs to go.
Well, that being the case, what makes you more unique than the outfit down the street?
Yeah, sure. Well, there's a lot of folks in this industry. It's becoming almost a crowded space with a lot of the older, more established 3PL, if you will, or freight forwarder that's trying to get into the e-commerce fulfillment, and they don't have good technology. They don't have a good know-how of the eaches, of the onesies and twosies that we can do in high volume very well. We have our own technology that we built in order to operate this business effectively and efficiently, and that's something that the players that have been around for a long time are trying to get into, and they're stumbling over the technology burden and just the operational efficiency, scalability of that type of business. And then on the flip side, there's a lot of folks that there's a couple players that have popped up in the recent year or two, just seeing how the need of this type of service is out there, and they've gotten Wall Street type or venture capital type funding and developed a brand identity in fulfillment overnight. And frankly, they don't have the experience and the know-how to be able to do this type of business. And we've seen a lot that these other players tend to be kind of in the no business, where they can do the high volume fulfillment, but only if it's this way, and they have one way of doing it. We separate ourselves by not being in the no business, by allowing our clients to tell us how they want their brand experience to be, to how they want their unboxing experience. And the unboxing experience is when the end consumer opens that box, and what does the order look like? How is the placement of the product? What kind of tissue or marketing materials or stickers and other types of dazzle is in there? We'll do anything that the client, as creative as the client is, as creative as our clients can be in coming up with how they want the orders to look upon arrival. We can execute whatever that is. And I think between our technology and our scalability and our ultimate execution, we're able to separate ourselves from people that have been in business for 25 years, and also separate ourselves from the newer guys that are popping up with a bunch of funding and making a name for themselves overnight.
Okay. Well, the reason you're on this program is because you have such a good reputation. But let me kind of break them down and see if I'm understanding it correctly. When you talk about onesies and twosies, you're talking about the smaller company or online merchant who sends out one or two items per customer, and oftentimes I've been told that's the most expensive part of the fulfillment area. And you have a way of doing it relatively inexpensive. Am I correct in that, or have I been misinformed?
No, yeah, absolutely. I think you hit the nail on the head. So there's a lot of folks out there that can do the wholesale business where they're shipping a couple thousand units of something, case quantities of something to a big box department store. But when it comes down to shipping a couple thousand onesies and twosies every day, individual orders, they kind of fall apart. We've developed a lot of technology and a lot of process in place to be able to do high volume individual orders on a daily basis.
Before I go further, where are you located?
We're in Secaucus, New Jersey. And that's our headquarter location, and we have strategic partners all around the country in major markets in Canada and in Asia as well.
Well, I'm told that the most expensive part now of this global distribution world we're leading into is that last mile, the delivery. Where do you fit into that group?
Sure. Well, with my experience that I opened up with and having worked for some parcel carriers in my career, I've developed great relationships with a number of the carriers, and we maintain that relationship with several carriers and spread our aggregated volume across a variety of carriers, so we have options. That's yet another thing that separates us from other folks out there, because we don't just throw all our eggs in one basket with one carrier and this is it, take it or leave it. Different carriers are better for different types of goods based on size and weight and value and destination. All of those factors really go into deciding what is the best carrier option, because there's some really economical type services out there where postal consolidators will partner with the USPS and they'll zone skip the post office and the USPS makes the final delivery, and then there's of course FedEx and UPS, and we use them all, and we've got good volume with all of them, and we extend a great discounted rate to our clients.
Okay. Brendan, you slipped in a word there, skip. I didn't quite catch it. You have to understand a lot of our audience is relatively unsophisticated, and you're using terms that are everyday to you but are new to me and to our audience. Could you explain that
I think
term?
I said postal consolidator. Was that the word?
That, and there was one more, skip something, but
zone
from
skipping.
Now,
Yep.
Yeah.
So, sure. So the postal consolidators, these are companies that aggregate a lot of volume of mail and parcels, small packages, and then they do the trucking and the air carrier, or the air carriage from an origin across the country, and they skip the different postal zones. So the post office has 8 zones. If you ever walk into the post office and you say, how much is this to ship from New York to Chicago, there's a chart and says, well, New York is here and Chicago's zone 5. And then they say, how much to ship from here to Los Angeles? Well, that's zone 8. So these are the postal zones, and there's 8 of them. And it starts out from a 250-mile radius of your origin. That's all zone 1 and 2. And then it extends out from there, and it can be as far as zone 8. And there's these postal consolidators will skip the zones in the post office. They'll carry the packages to the destination zone and then hand it back to the post office, and the postman makes the final delivery, that last mile. And so it's another option out there that a lot of smaller retailers aren't even they're not even in the know about yet, because you need considerable volume to be able to leverage a service like that. For most people just getting started, their only options are UPS and FedEx, and so we have a number of other options under the hood here.
Well, that's why you're here, because our audiences are learning that there's one rate, and then there are different rates if you know where to go, like a company like yours. But I'm a new retailer. Like I had recently on the program someone who is selling sponges, monthly sponges for kitchen in packages that are 6 inches by 6 inches. And their volume, let's say, was 10,000 pieces a month. But they go individual. Would they come to you and to get a better deal in delivering these packages?
Well, I sure hope they would. I think we could do a great service for them. Our process is that they probably make these sponges in Asia or Middle East or.
Believe it or not, it's North Carolina.
North Carolina. Okay. Well, that's fine too. Just as well. So if from the manufacturer from North Carolina, they would truck the sponges in bulk up to our facility. We would receive them both physically and virtually. And what I mean by that is, in our warehouse, we would receive them physically, and then we would check the quantities of the cases or the packaging, the pallets, however this comes in. We would check and count the quantities coming in, and virtually receive them into our warehouse management system, into our WMS, and from there, we pass that information back to you, and then you have those quantities available in your order management system and on your platform for taking orders. And every day that you receive orders, you transmit those orders to our WMS, and this connection should be made seamlessly. We should make this a one-time connection, and then it's live in real time every day, every hour, every minute thereafter. And every day we'll take the orders that we receive. We'll pick them, we'll pack them, we'll ship them, and then we'll send tracking information back to your order management system so that you can communicate with your customer that the order is shipped, and then we'll give you back an accurate inventory count for what you have available left to sell. And then from back to the conversation we were having before, through our consolidated volume with postage, we'll give you a great deal on the shipping, better than you could get, on your own. I'd say 9 times out of 10. So, depending on the size and you mentioned the weight, the size, depending on where they actually weigh, packaged, I would make a recommendation on the appropriate carrier service from there. And what is the transit time that you want to get it to your customer in, and what expectation you're setting from that standpoint as well, because all these different carriers have different transit times with how fast they'll get it to the end consumer.
We're talking with Brendan Heegan. He's founder of Boxzooka, Fulfillment and Global E-commerce. Brendan, your website for our audience?
Sure, that's boxzooka.com, BOXZOOKA.com.
In this current economy, people are saying that they're having difficulty finding people to fill jobs. How do you go about finding and training your employees?
Well, we're positioned in the Northeast of the United States, close to New York and right here in New Jersey, and there's a lot of warehouse activity and a lot of businesses in a similar but yet different realm, where our hiring pool is deep, if you will. So we're fortunate to have a good selection of candidates. And we have a very rigorous training program here where we cross-train every one of our employees on every function within the warehouse, so that everyone is able to do any different job here. And a lot of places don't do that because they don't want somebody to get too good and too smart and then lose them. We have a different mentality. We want everyone to be the best they possibly can be, and then compensate them in return. So that they're incentivized to stick around.
Well, what do you find are the two biggest problems you face? I'm told that distribution is one of the fastest growing sectors of the country, but what are the problems that you're facing? And in particular, has Bitcoin affected you at all yet?
No, we deal in good old fashioned cash. We do take credit cards for a pass through on the credit card processing fees, but Bitcoin and cryptocurrencies are not a part of our business, and frankly, I don't see it really. I don't see any of our clients really entering into that arena just yet. Our biggest challenge, I think, is really just to your point, that it is a fast-growing sector, and there are a lot of places popping up saying that they can do what we can do, and it's becoming somewhat of a crowded space. And there's folks out there that frankly can't do what we can do, and don't offer the customization and the scalability and the true partnership that we do embrace with our clients, and then offer to do it at a price that might be even lower than what our costs are sometimes, and that can be challenging. We really are set ourselves above and apart from really most other providers in this space.
I'm a new business. I'm launching my website. I come to you. What are the 2 or 3 questions you ask of a new client that they should know before coming to see you? Well,
they should definitely know, how many SKUs they have, and a SKU is a UPC. UPC or a SKU, and that's really has to be important that everyone's on the same page with that terminology. And what it means is it's each individual item unique by style, color, and size. Oftentimes we ask how many SKUs people have, and they say 20, and it's shirts, and they have 20 different styles, but not. And when you incorporate color and size, it turns out they really had 75 SKUs, right? So how many SKUs they have, how many units, how many individual units they're going to have, the quantity of all the SKUs of all the merchandise at the unit level, how many pieces, all right? And I think one of the most important things that we ask is, what is your, as a startup, if somebody doesn't have recurring business already, what is your customer acquisition strategy? Too many times we see brands that have a beautiful product, beautiful website, beautiful and really smart people, talented people, and a great plan otherwise, but they don't have a customer acquisition strategy and a budget for marketing. What I've seen too many times is that you can build this beautiful website and have this beautiful product, and if you don't have some secret sauce or money to acquire customers on the internet, they're just not going to automatically, magically appear to your site because you made it so beautiful or because you had such a spectacular product. You have to spend money or have some sort of secret sauce, some sort of influencer or spokesperson, celebrity, something to get your customers.
Well, that's darn good advice. Do you take returns? Well,
we don't sell any goods here, so return policies are managed by our individual clients, and but most of our clients, I think, do accept returns, and we do in effect receive and process those returns. We do full inspection, quality control, ensuring that it didn't come back worn or damaged or something that maybe they shouldn't be entitled to return or entitled to the credit rather. And we'll advise our customer accordingly. We put notes into the warehouse management system that pass right back through to the customer's reporting. So we facilitate. We provide the information that our customer needs to decide how to manage their return policies.
Well, that's what I meant. You are the person that physically takes the return.
That's correct, and in most cases we are. I'd say 90% of the time we are. We might have a customer or two that either doesn't accept returns or maybe they want the returns to come back to their office so that they can be the set of eyes on the merchandise coming back. I've seen that happen from time to time, but we're pretty good here on about being able to provide good information back to our clients so that they don't have to keep that part of the business on their plate if they don't want to.
What I'm surprised about, we recently got something and it was broken. Well, when we received it, we called the company up and they said, and we said we'll return it. They said no, they just sent out without anything. They sent out a replacement. Is that common or is that unusual?
Yeah, it really depends on the value of the product and the replacement cost. I've seen that with high volume, low value type retailers where it'll just cost them more money to have that warehouse or the partner facility otherwise to do the inspection to process the return and then the postage both directions. So if the price point of your item is less than say $20 or $25 or somewhere around there, it might not behoove you as a retailer to spend the money on the return postage and then the postage for the replacement product.
Yeah, it's fascinating. I could spend 2 or 3 more hours with you, but unfortunately, we're reaching the end. So Brendan, we're talking with Brendan Heegan, founder of Boxzooka, Fulfillment and Global E-commerce. You also say you deal on 4 continents. Can you just briefly outline how you work in other countries?
How we work in other countries? Yeah. So we're unique from a U.S. based fulfillment provider here, where we have integrated into our warehouse management system the ability to facilitate sales internationally for our clients, meaning that we can bolt our technology onto their e-commerce platform, and we can populate their website, the product pages, with the price of that product and whatever the local currency is, wherever in the world a shopper is buying from. And then when they go to checkout, we will populate the checkout page with the duties and the taxes and the full landed costs for that merchandise. And this is huge because many retailers will go to ship international. Well, many retailers just don't even want to deal with international shipping because it is confusing and there's a lot of risk involved. And if you send out your merchandise without the duties and taxes prepaid, you run a high risk of the end consumer overseas maybe not wanting it anymore because they got to pay all this extra money to receive it. If they know up front, they can make that decision before purchasing, and you can more guarantee that you're going to keep that sale if you're using our technology and doing that process up front. And then we have partner facilities overseas that can collect returns if the retailer is going to accept returns internationally, which some might not. But we have partner facilities that can do the collection of returns regionally to make it easier for both the end consumer, for our partner retailer, and for us for that matter as well.
And you can also fulfill internationally from your facility?
For the right customers, the right customer, the right volume, absolutely, and we do. And I preface it by saying it in that sense because like I suggested about the fact that a new retailer needs to make sure they have a customer acquisition strategy. A new retailer also needs to really kind of make sure they keep their eye on the ball and they focus on launching in one origin out of the gate. A lot of times folks will come to us and they say, we want to launch U.S. out of your place in New Jersey, and we want to launch Canada out of Toronto, and we want to launch Europe out of the UK. Can you do that? I say, sure, we can, but that's an awful lot of inventory to have to maintain in 3 different locations, and a lot of logistics and a lot of management. If you're a brand new brand and you don't know how much you're going to sell yet, I always tell people, launch out of one origin, and if it makes sense, and if you can maintain that inventory, and if you can plan your inventory, if you can forecast the allocation, meaning the how much inventory you should keep in each origin to fulfill that region's orders, only then should you make the decision to try to do fulfillment from multiple origins. A newer or younger retailer shouldn't even consider that out of the gate.
We're talking with Brendan Heegan. He's founder of Boxzooka. Brendan, your website again?
It's Boxzooka.com, BOXZOOKA.com.
Thank you so much for being with us. A link to your website will be on recalculating.biz tonight, where you can hear this and every other past and future Recalculating program. Brendan, you've really educated us. Have a good day.
Dan Perkins here from recalculating.biz with your featured book. I want to tell you about a recent interview I had with Bob Bethel, a turnaround specialist with lots of success in small business. Bob's new book is Strengthen Your Business, Fail-Proof Strategies for Small Business. He tells us of his life successes and failures that have made him and his clients so successful. Over the years, Bob has brought 77 companies back from the brink and changed them into thriving, profitable businesses. His energy is amazing, and at 74, he proves that you can still have a great deal to give others if you just try. His suggestions are easy to understand and very helpful. One insight struck me was that most companies do not have a plan. The old Chinese proverb says, if you don't know where you're going, then any road will take you there, is true today. Bob Bethel's book, Strengthen Your Business, can be found at Amazon.com or can be ordered at your local bookstore. This has been Dan Perkins with your Recalculating.biz featured book. Dan Perkins here with your Recalculating.biz small business tip of the day. Are you having trouble growing your business? Do you have a mentor? Sometimes running a small business can be overwhelming. You need a mentor. A business mentor can help you in many facets of your business. So here's your Recalculating.biz small business tip of the day. The SBA has a free program called SCORE. These individuals give of their time and share their experiences to create the next generation of small business owners who help grow the American economy. SCORE is the nation's largest network of volunteer expert business mentors. It provides free and confidential business consulting. These volunteers will work with individuals on starting a business, solving business problems, and growing a business. Visit www.score.org and you may just hit a home run. This has been your Recalculating Small Business Tip of the Day. I'm Dan Perkins.
Want to know more about health savings accounts for your company or yourself?
My co-host, Dan Perkins, is on assignment, but we are about to talk with Edward Chang. He's VP of Cyber Risk Management for the Travelers Insurance Company. And they have recently done a survey which I found eye-opening, and we invited them on Recalculating to talk about it. Ed, welcome to the program.
Thank you. Happy to be here.
Well, before we ask all our guests, before they start, tell us a little bit about themselves personally, about what they do, and the website where our audience can find out more.
Sure. So I'm here at the Travelers working in the field of cyber insurance, which is a relatively new type of insurance that's available for businesses to help them protect against the risk of having their data stolen, the risk of having hackers break in and cause interruption to their business operations, or to have hackers break in and steal money from them. So what we're doing at the Travelers is trying to find ways to help businesses protect themselves against actually being hacked, not just providing them the financial backstop. And so that's called risk control. So I'm a leader of the cyber risk control practice across Travelers. And really appreciate you having me on the call today.
Well, we here at Recalculating are very concerned about this area. Indeed, some of our audience is saying we too much time to the subject, but we believe that it is one of the biggest challenges facing small business today. I think we're going to start. You did a recent survey that you had some interesting results. Can you tell us a little bit about that?
Sure. So every year the Travelers does a survey called the Travelers Risk Index, where we survey companies to try to understand what companies are concerned about. What are the risks that small, medium, and large-sized businesses are facing in today's environment? In this year's survey, there were over 1,200 business decision makers who were surveyed, and we focused really on cyber risk. The survey covered a variety of different sectors, and we tried to understand what the executives in these companies are concerned about, where the cyber risks are, and what they're seeing out there. We found that a lot of the companies are really focused on the concern about security breaches when it comes to their cyber security, as well as not just hackers, but system glitches. What potentially can happen to a business if their systems go out for some reason that's completely unrelated to an attack, but just a failure of the system operations. And the third big concern that businesses have is unauthorized access to their financial accounts, basically fraud. If the hackers get in and are actually taking money out of accounts, transferring money out of their accounts, or using social engineering attacks to trick people into sending money that they shouldn't be sending, it can have a really devastating impact on a business, especially a small business.
Well, it's interesting. One of the things that we found in our own surveys is that a lot of companies think, especially small companies, it can't happen to us. Did you find that in your surveys?
That's a really good point because there is certainly a degree of overconfidence when it comes to smaller businesses thinking that they won't be attacked on the cyber front, and I think that is a mistaken understanding. In fact, there's a pretty well-known saying in the cyber field, which goes that there are two types of company in this world: those that have been hacked and those that don't know they've been hacked. And the person who said that was John Chambers, a pretty well-known figure in the cyber arena. And I think that is almost a truism.
Well, there's a lot of ways we can go with this question, but can you give me the three most common ways you found that cyber crooks get into businesses and do damage?
So the most common way that they typically get in is through a mistake that's made by an employee in responding to an email message or browsing to a website that they shouldn't be browsing to, some kind of a human factor, or even mistakenly sending out data to the wrong place, depending on what type of business you're dealing with. That sometimes happens as well. So certainly the human factor is the biggest concern that businesses should have. Obviously, there are a lot of significant cases where hackers are getting in through technical means. Like last year, there was a spate of ransomware attacks where they were getting into companies that hadn't adequately patched their systems. So that's certainly, I would say, a big avenue of attack as well, is the failure to patch systems or failure to have adequate security defenses.
Well, I'm a small business, and regularly, every day, I get an email that I consider suspicious, and I delete it before I do anything. If I don't know who it's from, or unfortunately, because we are in the news business, we get a lot of unsolicited mail. So we have we have to really prune it. But what I've seen lately is one where they're billing the company, and you delete it, but a week later it comes back, and you say, they're in a slightly different form. And then a week after that, the third time, you kind of say to yourself, well, maybe it's legitimate. I see that as something new. Have you seen that one? And the reason I bring it up, then I was talking to somebody just yesterday, and it turned out that sure enough that they have been attacked using that methodology. Had you heard about this, and would you care to comment on it?
It's definitely true that the attackers will pursue their attacks more than once. And so, the fact that you see an attack coming from an email is not surprising to me, and it's not surprising that they would be repeatedly making those attacks. What we really see a lot of is when companies, when company employees fall victim to a phishing attack, the attackers will come back after that same company multiple times. And it's because they realize that if they're able to succeed in stealing credentials or money or anything else from one employee of a company, then that indicates that that company's defenses are somehow able to be compromised. And so they will definitely come back on multiple occasions and try that same type of attack again. And it really speaks to a need for companies to provide good employee training when it comes to cybersecurity awareness. Because, as I said earlier, one of the primary ways that the attackers get in is through employee errors. And so that's also one of the primary ways that companies need to defend themselves is to train their employees to protect against that kind of an attack.
We're talking with Edward Chang. He's Vice President of Cyber Risk Management for the Travelers Insurance Company. And we're going to get into, they have a policy now to insure for insurance against it. But Ed, I'd like to talk now a little bit about what are some of the things a company can do. Obviously, education of employees, but what are some of the things they can do to stave off these attacks?
So that's a great question, Don. I think the number one thing that companies should do if they're starting to be concerned about their cyber exposure is to get a risk assessment. The business risk index that we performed at Travelers shows that out of small businesses, 75% have not done a risk assessment when it comes to their cyber exposure. And that's really quite a concerning statistic because if you haven't done a risk assessment, you haven't gotten a really clear idea of what data you have that needs to be protected and where the potential weaknesses are in your cybersecurity. So the number one absolute first step is to get that risk assessment. And from there, that should inform the business about what are the other steps that they need to take, whether it's adding additional technical security controls, developing a business continuity plan, or even purchasing cyber insurance. So all of those areas are areas where we see from the survey, the Business Risk Index survey, that small companies are a little bit behind the eight ball in not doing these steps. So, for example, we know that 81% of small businesses don't have a business continuity plan. So if you think about what's going to happen when the hackers get in and maybe take down the network, install ransomware on critical computers, what is that going to do if they don't have a plan set up? And again, 74% of small businesses don't have cyber insurance either. So it's one of these things where we are definitely seeing that small businesses are a little bit less prepared than their larger brethren when it comes to both security controls as well as obtaining cyber insurance.
Well, I'm going to ask you, Ed, why do you think that's the case?
I think it's a matter of resources and resources in terms of financial resources, but as well time and attention. If you think about small business owners, they and you certainly know much more than I do about this, but their attention is focused on their businesses, on the bottom lines, and they are not really able to focus their attention on protecting their networks adequately and are not able to think about what they're going to do in this all too common scenario of a cyber attack. Whereas larger businesses have the resources to do a little bit more of that contingency type planning and prepare for what most experts consider to be inevitable, that is, that there will be a cyber attack.
Ed, as your risk assessment, how much does it cost?
Yeah, so performing a risk assessment really can vary. Actually, it's not as if there's a one-size-fits-all risk assessment. When we speak to businesses at Travelers in the course of our underwriting, we see a whole range of different types of risk assessments that companies can do. Even just having your internal IT person, if you're a small business and you only have a single IT person, have that individual sit down and put in writing what are the security issues that the company may have, what is the types of data that the company is collecting, where is that data being stored, and how is it being protected. Even that exercise of putting that information down in writing will help formulate for a small business what its cybersecurity roadmap should be. So that's at the very small end. But obviously, as you get to larger and larger companies, you'll see third-party providers who will actually come in and do a risk assessment on cyber, and that would be a much more sophisticated exercise, and it would end up with a written report outlining what the company needs to be doing, where some weaknesses are. But it doesn't have to be that. For a small business, the important step is to understand that the extent to which the business is reliant on their computers, and for most businesses the answer is very reliant, and then to think about what steps that business can take within the resources that they have available to protect the network assets and IP and data assets that they have.
Well, you mentioned cybersecurity roadmap. What do you mean by that?
So for what we see with the companies that have given cybersecurity some degree of attention is a recognition that no matter how good your cybersecurity currently is, the technology is constantly evolving and the threats are constantly evolving. So companies can't just view it as a standalone problem that they address once and they're done with. You really have to view cybersecurity in terms of where are you currently standing, what are the biggest risks to you right now, and what is your roadmap going to be in terms of improving your cybersecurity. Because certainly I understand that businesses don't have, even large businesses have to make trade-offs in terms of what they're going to allocate their spend on. You can't expect a business to be buying the latest technology, whether that technology is firewalls or endpoint protection or data loss protection, penetration testing. Not every business can afford to buy the latest and greatest in all those services. So companies have to evaluate where are their exposures, what is the best way for them to address those exposures, and that's typically done through some kind of a cybersecurity strategy or roadmap document that would be produced as the result of a risk assessment.
That's really interesting. We're talking with Edward Chang. He's Vice President of Cyber Risk Management for the Travelers Insurance Company. But let's move on. Let's, God forbid, a company is attacked and loses all. Well, let us say someone gives it ransomware. Do you come in and they're insured by you? Do you come in and help them deal with the problem? How does it work?
Yeah, that's a great question. And actually, you say, God forbid there's an attack. The Business Risk Index shows that the percentage of companies that have been attacked over the past 2 years has doubled. So it's getting less and less, I should say more and more frequent. I was going to say less and less infrequent. That's kind of backwards. But definitely cyber insurance offers a lot of different ways to help companies if they've been compromised with, for example, ransomware. I think ransomware is a great example. We're seeing a lot of that in terms of insurance claims these days. So I think the first thing I would want to point out with respect to ransomware is that there are many different kinds of ransomware out there. We think of it as kind of a single thing, ransomware, but in fact there are many variants of ransomware, and there are many different criminal groups who are using ransomware to obtain money from companies. And the reason that's important is because it's not a one-size-fits-all solution when it comes to ransomware. You may be hit by ransomware, and it may be a form of ransomware where if you had the right resources, the right technical resources, you might be able to decrypt your systems to get around the ransomware. Now, in most cases these days, that's not true. In most cases these days, you can't decrypt your system once it's been hit by ransomware. So you need to have access to the right experts who can tell you what kind of ransomware you've been hit with. Now, beyond that, you also need to know when you're dealing with these ransom demands, are these ransom demands negotiable? And so having access to the right kinds of expertise who can tell you, yes, this particular criminal group is willing to negotiate, or that criminal group is not willing to negotiate, is also really important. And then actually most ransomware you have to pay. If the decision is made to pay the ransom, that ransomware typically has to be made in Bitcoin. which is a kind of cryptocurrency that I would guess most of your listeners at least have some familiarity with. But the thing about Bitcoin is you can't just go to your local bank and get Bitcoin. You have to identify who you are to a cryptocurrency exchange, and it takes several days to establish your identity and to purchase the Bitcoin, and that can take a while. So in order to actually pay the ransom, it's easier to have access to vendors who specialize in this kind of thing. And all of these kinds of services are services that can be provided to you through your insurance company, and that goes above and beyond the fact that your insurance coverage is available to help pay for the ransom itself, which can be obviously a significant cost just in and of itself.
Well, is your insurance based on a deductible? The first $500 is paid by the victim, and then how does your insurance policy work?
Yeah, so the insurance coverage, cyber insurance coverages cover a number of different kinds of losses. Ransomware is just one example. And as in response to specifically your question, yes, you will often have a deductible or a retention amount associated with your cyber insurance plan. So depending on the size of the business and the type of policy you're buying, there will be a $500 deductible or higher or lower. So it just kind of depends on what's appropriate for your company and the needs that you have in terms of the risk that you're trying to protect against. But as I said, ransomware is just one of the forms of coverage that most cyber insurance policies have available. Others include, for example, recovering from stolen data when there's a data breach. How do you address the data breach? Do you need attorneys, legal representation to help you understand if you have notification obligations that you have to satisfy for your customers? Another type of coverage is the business interruption coverage. So if an attacker actually hits you with ransomware and your business is out for a few days and you're losing income as a result of that, you might be looking for your insurer to provide business interruption coverage. And I think the fourth big bucket of coverage out there is protecting against fraud losses. So whether it's an attacker actually getting into your system and transferring money out of your accounts payable department, or whether it's social engineering fraud where they trick you into paying an invoice to the wrong bank account. These are types of fraud losses for which insurance coverage is also available.
We're talking with Edward Chang. He's VP of Cyber Risk Management for the Travelers. Ed, your website, where they can specifically look for all of this information, which I found fascinating.
Yeah, our website is pretty easy. It's www.travelers.com/cyber. And there you'll find a wealth of information, not just about cyber insurance, but also about the risks that businesses face with respect to cyber threats.
Well, so it's /cyber, CYBER?
That's right, travelers.com/cyber.
Okay, it's very important because I think there's a lot of people that are hearing this program we have been on almost a crusade to convince people how important it is that they know more about the cyber risk that's affecting. Our own surveys found that 1 in 11 of our survey respondents had been subject to a successful cyber attack within the last year, which was, to me, a very, very high number.
That really is, that is a high number. It's not at all surprising to me given what we know. But it's great that you're on this crusade because certainly at Travelers, we think that cyber risk is one of the most important things that businesses need to think about, because all they need to really ask themselves is, how reliant is my business on the information and computer systems that I have? And if the answer is anywhere from somewhat reliant to very reliant, then they absolutely need to consider what their exposures are to cyber attacks and just simple system failures.
Well, again, we're talking to Edward Chang. He's Vice President of Cyber Risk Management from the Travelers. He's brought us, again, another warning about the threat of cyber attack. Ed, any last thoughts you'd like to impart to our small business audience? 59% of our audience, according to our surveys, are presidents and or owners. So what would be your final thought to them?
My final thought really is that companies these days, and I think we're opening up a new can of worms with this final thought, but I really have to get it in there if you don't mind, Don. Companies these days are starting to move to the cloud. They're starting to go to cloud-based email services, cloud-based payroll services. And my one final plea to all these companies that are doing that is to please consider using multi-factor authentication to protect those services. We're seeing an awful lot of claims coming in from companies that have not been using multi-factor authentication in the cloud, and that really exposes them to significant losses that could be pretty easily avoided. So that would be my one final plea for you, for your audience.
And a great thought it is. Thank you, Ed Chang, Vice President of Cyber Risk Management for the Travelers. Thanks for coming today and giving us this warning.
Well, thank you, Don. Really appreciate the opportunity to be on your show.
A link to Travelers/Cyber will be on recalculating.biz tonight, where you can hear this and every other past and future recalculating program. And you can also give us an idea of who you'd like to hear on the show. Ed, thank you so much for being with us.
Thank you, Don.
Marcus Lemonis, J.D. Powers, and John Scully, and 100 other presidents and experts contributed to recalculating the book. Why did all these people agree to contribute to the book? I'm Don Mazzella, and I'm the editorial director of Small Business Digest. And for 20 years, we have been offering small business leaders information and data to increase profits. Recalculating the book was named the best small business book by the Independent Press Association. Whether you need help with marketing, staffing, finance, operations, technology, or many other subjects, they're all here in Recalculating the book. They're now available at Amazon at a reduced cost. We've also created the radio program Recalculating on recalculating.biz.
Dan Perkins here with your Recalculating Small Business Tip of the Day. Do you know what spilled milk smells like in a few days in a hot car? Many small business people use their trucks or cars as transportation for them and in some cases employees. It's also a place to do business and you want to keep it clean. I have a builder friend that took a new employee to a job site who packed his lunch. At lunchtime, he bought a carton of milk to go with his sandwich. One day, the worker didn't finish the milk and set the bottle on the floor. When he shut the door, the milk fell over and spilled on the floor and sat there for the rest of the day, and then the employee returned and noticed that the milk had been spilled. My friend tried everything to get out that foul smell. After spending a considerable sum on carpet cleaners, eventually he had to replace the carpet. Make sure you carry at least one roll of paper towels. The nose you save may be your own. Check out recalculating.biz for more useful small business suggestions. This has been Dan Perkins with your Small Business Tip of the Day.
Thank you for joining us on Recalculating. We hope the information you received on today's episode was helpful to you in starting and growing your business. Please go to our website, recalculating.biz, to contact us, to listen to past shows, and see special offers. Until next time, remember, if you grow, we grow. Join us next week for more helpful ideas to make your business a great success. Recalculating, a program designed to help you be successful.